Modi, our friend from Samco Securities here, waiting back patiently. Good afternoon, Jimit. Thank you very much for joining us. Let me, you must be listening to the commentary of Naveen Jindal, offline. Let's get your views on metal as a pack and the results the metal pack is throwing pretty decent on expected lines. What is your own positioning on some of these counters such as GSPL and others?
So, thank you very much, Ajay, for having me. And it was a very interesting conversation that I had a chance to listen to. And I think one of the biggest takeaways was of how old age steel and metal companies are now looking at leverage and now almost, so to speak, are getting allergic to leverage, and want to try and stay away from that as much. And that is extremely heartening to see. Because all of these companies, all of the metal companies which typically did underperform over the past decade was solely because of the extremely high cost of leverage. And I think our point of view is that it's an interesting space. The performance of those guys who have a healthy balance sheet is likely to be good. So we do believe that the likes of a GSPL or a JSW Steel will continue to outperform, and Vedanta for that matter, will continue to outperform the others in the metal pack. So, from an investment standpoint, this is a cyclical play. The cycle is still playing on, but it may make a lot of merit and sense to stick to the guys who have a reasonably healthy balance sheet, and in case the tide does turn, with a healthy balance sheet will actually outperform the rest of the peers.
The campaigning in Karnataka has finally ended, Jimit, and all guns blazing. Both of the parties have done everything that they could in attempt to woo the Karnataka voter, if you will. What do you think would be the implications of this kind of a state election on the markets as a whole? Will they pay a lot of attention to, what could potentially be the outcome in terms of reforms, policies, etc.? What is the bearing from a stock market standpoint?
So, our view is that Karnataka election are probably going to get discounted in a day or so, in the sense that I think by 16th we would have firmly put Karnataka election results beyond us. And the way we are seeing this is that there are two possibilities. Either the BJP does actually end up winning Karnataka on its own, or it does so with help from the local parties. In either case, what we believe is likely to happen is that the markets have, over the movement of the past week or so, started to discount that. So, since the highs of February till date, the India Nifty index has outperformed the MSCI Emerging Market Index by about 6-7%. That I think largely has to do, that outperformance has got to do with the markets trying to price in a BJP victory. So our view is that even if the BJP does win, we are not going to see a great runaway rally, and markets from the following day will start looking at global cues more closely. However, if there is a downside surprise, and if the BJP is unable to actually form a government either on its own or by way of an alliance, then we could be in trouble, because then the outperformance of that 7-8% vis-a-vis the MSCI Emerging Market Index could get corrected very, very swiftly, and that could actually tantamount to a correction of 400-500 points in the very short term. So we are very, very keenly watching what happens on the 12th in terms of voting and how the exit polls come out. I think we will have enough data by Monday morning to sort of try and at least bucket which side this election is going.
Jimit, let's get your opinion on the telecom space. The fierceness of competition is only getting intensified. Today we are looking at almost all telecom stocks bleed in trade. We just thought that probably bottoming out of the tariffs is happening, and a fresh round of tariff wars seem to be starting with the post-paid plan now from Jio. How are you analyzing Bharti ideas of the world and Jio's strategy so far?
So it is an interesting space, Ajay, and I think the way the stocks have been hammered today is very, very interesting. Our view is, I think we stopped tracking idea a while ago, because as we keep getting closer to the merger, there will be increasing ambiguity on what the consolidated financials of the merged entity will look like. And for want of data on that, I don't think we sort of are in a position to even price or value idea. On Bharti, I think Bharti is relatively strongly positioned as compared to the other two incumbents, broadly because I think they are playing this for the long haul. Their entire Africa strategy, their entire strategy around Infratel seems to suggest that they are going to sort of be neck and neck in this price war and fight with Jio to the end. And over a period of time, it's going to be, it's not unlike segments like an e-commerce, so I don't think it's a winner's take all market. So at some point of time, definitely when the dust around this price war settles, could be maybe 6 months down the line, once Jio's done sort of also capturing a part of the postpaid trade, then I think the dust will settle, and then there could be some real value that could emerge in all of these businesses. But so far, I think again it's hard to catch a falling knife, and we would recommend against doing so. But let's say if there was a phase where Bharti did sort of settle at a particular level sideways for a period of 50 days to 3 months, then we could certainly look at going long on that stock.
Jimit, what's the view on some of these electrical equipment players, etc.? For instance, today Havells just a short while ago posted a very strong set of numbers. Any businesses, or do you like the models within this space? Do you believe that the summer trend could bode well? How are you looking at this sector as a whole?
So broadly we are extremely bullish about the entire consumer durable, so to speak, space, and I think Havells is a great stock, and it's a great business. I think it's a business that has done really well over the past few years. I think they have the strategy right across the board. I think even from a technical standpoint, the stock seems to be breaking out about 550 at least in the short term. So Havells is an interesting stock, and even there are other plays in the consumer durable space. So something like a Berger Paint, something like a Kajaria. I think that's a story that we are very, very interested in, and that we are likely to play out, that we think is likely to give good returns over the next 6 to 12 months. So that's a space that we are very keenly looking at.
Jimit, I want to understand from you your positioning in the market right now at a time when there are clear glimpses of earnings growth coming back, though valuations may be challenging. At the same time, uncertainties globally are easing, while on the macro front, locally uncertainties are only increasing, like crude, for example, at 78. What have your activity been in the last few weeks and months, and how are you positioned in your portfolio right now?
So I think Ajay, broadly the way we are, there are two buckets that we are sort of positioning ourselves in. One is an extremely long term view with a 3 to 5 year view, and I think there is enough and more value available in certain interesting spaces. So for example, something like a consumer durables that I spoke about, in a few select housing finance businesses, in few media businesses. So I think from a 3 to 5 year point of view, there is enough and more value available. We are looking at, which is a shorter term trading bucket. We are sort of taking only a 3 to 6 month view, because we typically are trying to take, it's going to be 2018-19 is going to be a very political heavy, election heavy year. So it's going to be hard to time entry and exit out of the stocks and in and out of stocks every time there is an election around the corner. And I think what happens in Rajasthan, what happens in Karnataka will be very interesting and will set the tone for 2019. So we are relatively light on our trading book, very, very selective. we will now going forward, we will try and look at opportunities which will sort of benefit from crude falling, because our view is that crude is now going to sort of have a topping out pattern between 75 and 80, 82. I don't think that we are going to have a runaway rally in crude, at least in the short term. So there could be a reasonable correction in crude prices, which could sort of throw up some trading opportunities as in businesses which have outperformed. So for example, something like a Castrol or so, which has underperformed because of the crude rally, could sort of come back and present a reasonably decent trading opportunity. So I think that's how we are positioned in the shorter term from a trading point of view, and in the longer term from a 3 to 5 year investment point of view.
Thanks very much, Jimit, for joining in. Great to have you with us on the show with your view on the overall markets. On that note, we'll call it a day. So coming up next, we've got closing trades taking forward all the market action. Stay tuned.